Hi, this is Craig for the OptionsLinebacker weekend video on Friday, February 22nd. One of the things I love in technical analysis is chart patterns, and we got a great example of a symmetrical triangle chart pattern that we brought up last week, but it's even more developed right now. You can see it just sort of coiling inside this triangle just like a big spring, and it's going to come flying out of here at some point pretty soon. Now the target that we have is about the width at the open end of this triangle, either to the upside or the downside. Normally these are continuation patterns, meaning that as we've broken down here, it's going to consolidate before it does continue on the downside. And that certainly looked like the case today, as we had some very bearish price action, except for the last half hour wherein a huge bear trap was sprung. So after that, I got thrown right back in the center of the triangle, right around 1350, and it's going to resolve itself fairly soon, one way or the other. Anybody that thinks that they know which way this thing is going to break out is just kidding themselves, because it literally could go either way. So again, the upside target for this would be around 1450, and that lines up pretty well with some pretty strong overhead resistance at around 1440 on here. And the downside targets would be about 1250 or so, although I think it's going to be difficult for it to break through 1270 on the first try, which was the previous low. Now if it does break to the downside out of here initially, that's not necessarily long-term bearish, because these are very common, these retests down to revisit the previous lows, and that usually, a lot of times, if the market's still fundamentally healthy, which there's some question about right now, it can serve as a real springboard to waves much, much higher. And we saw this in 1998, was this exact type of double bottom off of an apparent meltdown. And we all know what happened in the following 2 years after 1998. Now I talked about this being a bear trap initially. We came very weak out of the gate and found some support down here, and then right around 330 or so, boom, the bear trap was sprung. So all these Johnny-come-lately bears that jumped into the market thinking that this was the big breakdown out of that triangle pattern, because everybody can see that triangle pattern and everybody's camping on it, either trying to play it long or short, got completely immolated on this bear trap in the last 30 minutes. So all this is short squeeze right up into the close. So we're right in the center of that triangle once again. It could go either way from here. And here's a chart of the Russell 2000, which is where I'm playing my condor positions this month, and you can see my topside credit spread up at IWM 79, and my downside credit spread, which I'm playing at IWM 59. Now these blue triangles here are my butterfly positions that I've got in place as more of a defensive position, and I'll show you why here in a second. So again, the same triangle pattern, either way that it breaks out, we've got a defensive butterfly in place, which is going to potentially increase our profits the later that this attack comes in the month. So right now I have very little delta risk. We're right in the center of the condor. Everything is looking terrific for March, with a little less than 4 weeks to go before expiration. Here's a shot of my broker's analyze tool, and you can see right now the white line is really the P&L for today, and the green line is the P&L for expiration date. This white line here is kind of the zero line as far as profit and loss. So anything above this line is a profit, anything below this line would be a loss or a debit. And you can see that at the 59 level of the IWM, if I let the price go below the lower iron condor or the lower credit spread position, I could have a potential max loss over here that's pretty significant. And the same deal over here, if I let the price get above IWM 79, it could be a fairly significant loss. However, look at the sweet spot that I have here. Now I mentioned the butterfly positions. What you can see is this looks a little different from a normal iron condor position. Look at these bumps that I have right here, which are signify the max profit of the butterfly. So if the price is right here as we speak today, again right at the center. So what happens is if we get a late attack on our position up here, if it gets fairly close, it can actually increase my profit through the end of the month, either to the top side or the downside. In fact, let me remove those butterfly positions and you can see what kind of a difference it makes. Okay, again, here's what the iron condor looks like without the butterfly position. So you can see a very flat profit curve between the short strikes on the downside position and the top side position. But when I add these defensive butterfly positions, it helps me defend this trade near the end of the month, which is where most of the attacks come, because it usually takes until the end of the month before you can get to one of these strikes that are so far out of the money. So I hope that helps explain the management of the iron condor positions by adding these optional butterfly positions in here as well to help augment your defense and potential profit for the trade. So thanks for watching and tune in next week. In the meantime, come see the linebackers live at our Advanced Iron Condor seminar near Columbus, Ohio on March 8th. Our next seminar after that will be in Nashville, Tennessee on April 19th. Only $299 for a super focused day on how to set up and defend iron condors. So go see our website under the Seminars tab for more information. And don't forget, you can get a daily dose of this market commentary and iron condor position management through our daily newsletter. 5 days of free trial, only $49 a month to learn a skill for life that works in any market. And our other products include the Iron Condor Trading Guide, only $15, emailed to you that business day. As well as the Iron Condor Video Coaching Series, online video series with 21 chapters and over 4 hours of instruction. So good trading from the Options Linebackers. See you next week.